the cloud's going to be big. I mean, I think this is the second iteration of technology, the internet being kind of the first one, maybe the PC being the first one, internet too, and now we're getting to the cloud, and what does that mean? And there's still a lot of unanswered questions here, but Amazon's last number, as I said, we've owned Amazon since 2000, 2001, and Amazon's last quarter's numbers were really quite staggering. I mean, the acceleration on the top line was far faster than what was going on in retail. And it was because of what's called AWS, Amazon Web Services. And so the adoption rate of people that are using the cloud, and Amazon being the second largest provider of cloud services out there, would indicate to me that that company is evolving again. So we talked about, was it Barnes & Noble, and it was Walmart, and it's Dell Computer. Well, now it's evolving again into something that is more of it's a technology company with technology services, of which one of their services is the direct distribution of retail products, but another service is providing cloud computing. And so how's that going to work out? The thing that we don't know a lot about the cloud and stuff like that are things like margins. We think it's very tight margins, but it could be a volume business, in which case Dell had lousy margins, right? But huge volume and huge turns, which allowed them to do 100% return on capital. So it's not all about margins. So it's about volume and turns and things of that nature. So I think how that works, and Rackspace is another company that does the cloud computing. Open source software with Red Hat, it seems to be a growing. So that's kind of a plug against Microsoft. I don't think corporate America is ready to turn off the Windows product, but over time it looks like there's some evolution going on there. And I think, Oliver, we are, in the midst of this macroeconomic uncertainty, we're missing the bigger picture that likely there's economic gains going on worldwide that I don't think we fundamentally understand at the most basic level of what's happening in the emerging markets. I mean, we know China is this, we know there's more people over there and stuff like that, but I don't think we really grasp what it means when the World Bank tells us that there's going to be 2 billion middle-class consumers, global middle-class consumers in the next 17 years. And I want to repeat that, 2 billion. That's like 7 United States over again. It's like, how do you really think about that? And you then begin to think about the companies today that sell products, and their products will be more affordable to 2 billion people in the next 17 years. I don't think we've yet grasped the magnitude of that economic return. So, whether it be companies like Diageo or Coca-Cola or Unilever or Nestle or Prada or Louis Vuitton or whatever the case may be, I don't think we're even close to, measuring appropriately what that economic return will be. I think it's going to be much, much higher than, it's currently much, much higher than what the market's discounting right now for sure, but it's much, much higher than even our wildest imaginations can grasp. I just don't think we have our hands around how much economic ferocity is coming our way because of what's going on in the emerging markets. It'll be interesting when, by the end of this decade, in 7 more years, that, the BRICS collectively, their GDP will be bigger than the G7. What does that mean? How do we think about that? And so there's a lot of things that we need to get our hands around. I think we understand it at the surface level, but I don't think we really imported it into our models in a way to really grasp what that meaning is going to be.